Did you know that most Americans pay thousands of dollars extra in taxes every single year? Not because they have to, but simply because they don't know the legal ways to save. My name is Alex, and welcome to Money Morph USA. In today's video, I am going to share with you the top 10 completely legal tax-saving tips for 2026. These tips can save you anywhere from $1,000 to $10,000 every year. So make sure you watch till the very end, because tip number 7 is something most people completely ignore. Let's get started. The very first tip is to maximize your 401k contributions. A 401k is a retirement savings account offered by your employer. Every dollar you put into your 401k reduces your taxable income. For the year 2026, the contribution limit is $23,500. So if you are not contributing the maximum amount, you are literally leaving free tax savings on the table. Talk to your HR department today and increase your contribution. The second tip is to open a Roth IRA account. A Roth IRA is a special retirement account where your money grows completely tax-free. Yes, you heard that right. Tax-free growth. Tax-free withdrawals in retirement. The contribution limit for 2026 is $7,000 per year. If you are young and just starting your career, a Roth IRA is one of the smartest financial moves you can make right now. Tip number 3 is to use a health savings account, also known as an HSA. An HSA gives you a triple tax benefit. Number 1, your contributions are tax deductible. Number 2, your money grows tax-free. Number 3, withdrawals for medical expenses are also tax-free. For 2026, the HSA limit for a single person is $4,300. If you have a high-deductible health plan, open an HSA right now. It is one of the best tax-saving tools available in America. Tip number 4 is the home office deduction. Do you work from home? Then this one is for you. If you are self-employed or run your own business, you can deduct a portion of your rent, electricity, internet, and even furniture. The key rule is that your home office must be used exclusively for work. It cannot be your bedroom or living room. This deduction can save you hundreds, sometimes thousands of dollars every year. Tip number 5 is called tax loss harvesting. Here is how it works. If you have investments in the stock market and some of them are losing money, you can sell those losing investments to offset your gains. For example, if you made $5,000 profit on one stock but lost $2,000 on another, you only pay tax on $3,000. This is completely legal and widely used by smart investors across America. Tip number 6 is the child tax credit. If you have children under the age of 17, you may qualify for up to $2,000 per child as a tax credit. Remember, a tax credit is even better than a deduction because it directly reduces the amount of tax you owe. Make sure you claim this credit when filing your tax return. And here it is, tip number 7, the one most people ignore. Start a side business. When you have a business, even a small one, you can legally deduct many of your everyday expenses. Your phone bill, your laptop, your internet, your car mileage, your home office, your business meals. All of these become tax deductible. You do not need a big company. Even a freelance service, a YouTube channel, or an online store qualifies. Consider forming an LLC for even more tax benefits. Talk to a CPA to set this up properly.